Hi there. This REIT, VICI Properties, is paying a dividend about 5.5%. And if you look at the history of this dividend from its IPO, you can see a huge growth rate. The dividend has increased from 71 cents to more than $1.67. A growth rate of 63%, first year, 5%, then an increase to 10%, 8%, 7%, and 5%. And by the way, this rate keeps growing. In the next 5 to 10 years, the dividend might double again from this level. And by the way, if you also have a decline in the stock price like this, as it happened during 2020, your dividend can be even higher than 10% a year. And you might wonder, what if their tenants default? What if they lose on their debt, on their loan? What if? Well, if you look at this business, you will see that the risk is not that high. And I'll show you why. First, you have to ask yourself, how do they make money? So that you can predict their future and how much money they'll be able to make in the future. By the way, these are their shareholders of VICI Properties. So they have, you can call them segments, 4 segments. Now, the 2 most important segments are their rent from their properties. They have 93 assets consisting of 54 gaming properties. Pay attention to these gaming properties, so they depend on this sector. And 39 other experiential properties across the United States and Canada. So they make money from those real estates, these assets. And then they also have a portfolio with real estate debt investments. They lend money to other people and they earn an interest. And besides this, they also have a small portion of their revenue from a land which is close to Las Vegas. And they also own some golf courses located near their properties. And here below you can see their revenue from rent, from their loans, from their land, and golf revenue. And you can see over the last 3 years, the revenue has increased quite a lot, from 2.6 billion to 3.8 billion. And this is a high growth rate. And you have to ask yourself if they continue to do so in the future. Now, let's check the latest results. For 2024, you can see the revenue has increased by 6.6%. A high growth rate for a REIT like this. And funds from operations by 8.4%. Now, if you want, adjusted fund from operations per diluted shares have increased by 5.1%. But still, this is a high growth rate. This means, if they continue this way, they can also increase this dividend by 5% a year. And sometimes even more if they make the right investments. And you also have to ask yourself if they can make the right investments. To do that, you look at their history. For instance, let me give you an example. Here, transaction property acquisitions in 2023. You look at the past. They bought some properties and they earned some rent. And if you compare the price they paid for those properties, 4.1 billion back in 2023, and the initial rent, by the way, this is growing year by year because you have inflation and they have a contract to increase the revenue, you can see that the initial annual rent was around $291 million. So if you do the math, their yield on the properties was about 7% back in 2023, their initial rent. But now in 2025, as they have inflation, their contract to increase the rent, the yield got higher, from 7%, maybe around 10%. So their capital allocation is quite good. And you also look, because you can see here, they have 2 segments. Money from rent and money from their loans, the interest they earn. So you look at their loans. How do they make money? Well, they take on debt, they pay an interest, and you can see here the average interest between 3 and 4.5%, you can see here. And then you look at the loans they offer to other people. And you see the interest, the weighted average interest for 2024 was about 11%, 8%, 9%. In 2023, same thing, 11%, 7%, 9%. So when you compare the cost of their debt, 4%, the average, and with what they earn on their loans they offer, 8%, 9%, you can see that their return is quite high. Of course, they also have some losses. You can see here. Allowances, or you can call them the loss rate, which is about 3%. Now, if you do the math, what they pay, 3.7%, add another 3.5%, they are still able to make a profit on their loans they offer. So in this way, you can analyze their assets. Real estate, as you've seen here, the real estate, how much they pay and how much they earn, and of course, that rent is growing year by year, and also how much they earn on their loans, the interest they get. And as you've seen, their rates are quite high. And the other two segments, their land and golf courses, you can see that represents just a small portion of their revenue. So you don't have to worry about that. But still, if you look at the growth rate, also the other two segments are growing quite nicely. Because their land increases their value over time, and also their golf courses. You see this. So this growth rate, the growth rate of this REIT, VICI, is likely to continue in the future. And you see, you'll be able to see other growth rates in their dividend. And if that happens, the dividend from the current yield from 5.5% can reach 10%. But as I said, if you also catch a decline in the stock price of this REIT, your dividend can be higher than 11%. Now, you might say, but what happens if the US, because the majority of their properties are in the US and Canada? You can see here. What happens if the US and Canada goes into a recession? And to answer that, you have to ask yourself, who are their tenants? Who are their tenants? So you can predict the future outlook if they are able to pay the rent. Who are their tenants? You can see that their tenants are leading gaming and experiential operators across the United States, Canada, and abroad. Most of their assets are in the US and Canada. So, their tenants depend on the gaming industry, right? And of course, some of their assets are for experiential operators. But a large part of their revenue comes from gaming, the gaming industry, casinos. If you look on their website and go here, their tenants, you can see casinos, and so on. So, to assess their future outlook during a recession, downturn, you also have to ask how the gaming industry is performing during a recession. So how can you find that? Well, you do the work, you do the research. So, to help you, you can see here and ask this question: how will they perform during a recession? And if you look at the past, at the most important recession, the greatest, between 2008 and 2009, you can look at US consumer spending during that period. And you see here in billions. The highest peak, 47 billion, right? 2009, 34 billion, the lowest point. So you see just a small decline in their spending, US consumers, from 47 billion to 44 billion. So just a loss of 3 billion. And that is quite small, quite small. They can still survive. Those casinos can survive. Because when there is bad economics, they will try their luck to see if they are lucky. So they will take on more risk. Maybe. It depends on the person. And then you see this growth rate ahead. From 2009 to 2016, and today it's even higher. If you do the research, this number might be even higher. And by the way, these REIT VICI properties are in a well position because the rent they charge for those casinos is higher than the normal REIT. I mean, if you charge for residential properties, the rent is lower. But for casinos, because they make high profits, they have foot traffic, the rent is higher. And VICI can continue to grow more in the future, increase their funds from operations, and pay this dividend, and also increase this dividend to reach a yield of 10%. Now, if you are able to buy at the right price, your yield may be even higher than 5%. So, if you put a gun to my head and ask me what price would I pay for this stock, for this REIT, the answer is available for members. If you want to know it and have a return higher than 5%, then you can join my membership. And to do that, pay attention to this. Join my membership from an Android or laptop to avoid extra fees from Apple. So you go to my profile, join, scroll down to see the levels you want to choose, and press join. And that's it. So if you have other questions about VICI or other companies, please let me know in the comments.